Welcome back to this Moneycontrol live stream. You're tuned in to Closing Bell with me, Nandita, Khemka. It has been a thrill of a Thursday for the market. We were talking about 26,100 at the open, but look what we've done. We've crossed the 26,200 mark on an intraday basis. In fact, I think the intraday high today was 26,246. We came just about 40 points, closer to that 26,277 mark. So just 40 points shy of that milestone of 26,277, which happens to be the all-time high for the index. In fact, we managed to cross that 26,200 mark for the first time since September 2024, almost in a year. And Nifty Bank, as we all know, has been clocking fresh highs. It's the third time this week that it has made a fresh high today. For the Nifty Bank, I think it was 59,440. That was the all-time high level that it clocked today. Reliance Industries, HDFC Bank, these are among the top contributors to Nifty gains, and defense, financials, oil and gas, these are some of the other sectors that have done well. Autos also up 0.5%. FMCG marginally higher. IT has slipped into the red, had a great session yesterday. The Nifty IT index that was up 3% or so today. Fairly muted at the current juncture, and so is the case with metals. Started the day on a very strong note. In fact, in the morning, metals were the top gainers. We had an HSBC note on metals where they have listed out some 5-6 stocks which they are bullish on, and despite the dollar index crossing that 100 level, we saw the metal index doing well. But today, right now, in fact, it has come under some bit of a selling pressure, given up most of those gains. But the Nifty mid cap index has been underperforming, and today as well it's no different. I think the Nifty mid cap index, as I was looking at the screen, has slipped into the red, and the breadth of the market has been a concern. Even right now, the breadth is skewed in favor of declines, and that has been the case in the last few sessions. So on the headline level, things looking hunky dory, but in terms of the broader end of the markets, the portfolios, there won't be much to really cheer about as such. But yes, let's take a look at some of the movers then. The individual movers, as I mentioned, Reliance Industries and HDFC Bank are among the top contributors. But there are certain stocks that are doing extremely well aside of these names. Bajaj Twins are at the top of the list of gainers today. Both the stocks are up in excess of 2%. Aisha Motors, if I am not mistaken, the stock has hit an all-time high. I'll just check, but I think it is in the list of the stocks that have hit all-time high. Yes, that's correct. The stock of Aisha Motors has clocked all-time highs. So has M&M Finance, SBI, Titan. For a second day, I think they hit a fresh high. Bharti Airtel as well. SBI Life. So some of these names have hit all-time highs in trade. Reliance Industries gaining somewhere around 1.5%. Tech Mahindra is up despite the fact that the tech index is down today. Axis Bank, that's also up in excess of 1.5%. Tata Consumer doing well. Bajaj Auto, Hero MotoCorp. I want to talk about that stock later on in the show. Third upgrade coming in for the stock in a matter of days. In fact, this week itself. So that stock hit a fresh 52-week high as well. We'll check with our experts if there is room for the stock to room further from here. That's something we'll check with our experts. But on the laggards list, we have the likes of Asian Paints, HCL Tech, Titan. Of course, after hitting fresh highs, stock has cooled off a bit. HUL, Tata Steel, Infosys, these are among the laggards. And by the way, on the headline index as well, we've come off slightly from the day's high. We have given up that 26,200 mark. So yes, some bit of resistance the bulls are facing as they sprint for record highs. But on that note, let's bring on board our guest for today. Joining me is Nirav Karkera, head of research at Fisdom. Nirav, lovely chatting with you, and it's been a good day. At least when you talk about the headline indices, we came 40 points. We came within kissing distance of that all-time high of 26,277. Would you say that the party has just started? We were thinking that perhaps by year end or by December we'll clock fresh highs, but we came very close today, and looks like next couple of sessions we could be there. What's your sense?
So Nandita, it has been quite a good day. I feel we are just slightly shy from creating a new record high. But I would be all the more upbeat and excited in my tone if the market breadth would also be supportive. The if you look at the broader end of the markets, what's happening is not very reassuring at this point in time. So the rally is entirely led by the pack of heavyweights. So it's a sort of a narrow rally that is showing up as very good headline figures. So a lot of sustainability is going to come in only if the strength is further percolated towards the broader end of the market as well. So until and unless that happens, I wouldn't call it a party as much, let alone determining if it has started or not. So yet this
Hmm.
remains a volatile market, and one needs to adopt a cautious stance. Of course, the flows are moving in favor domestic as well as foreign institutional are moving in favor of large caps and the Nifty heavyweights. So that could sustain for a little bit longer, but for the markets to really recover in a healthy manner, we need to see better breadth.
Hmm. That's true, and that has been the case, right? Most for a better part of the week, when we've seen the headline indices gaining, markets gaining, but the breadth largely in favor of declines, as is the case today. But the picture is quite stark when it comes to the earnings, right? Because when it comes to earnings, mid caps have fared much better. And if you talk about the Nifty universe, barring a few names, if you exclude them, maybe from the cement, oil and gas pack, etc., you will see the performance of Nifty companies has been fairly flat in the quarter gone by. Given the commentary, given all the outlooks that we have seen from the managements, what is it looking like for the larger Nifty universe for the next couple of quarters, in the sense for the rest of FY26? Your thoughts on that, and what have been the hits and misses for you in the quarter gone by?
So, at a broader level, at a Nifty entire pack level, and if we were to talk about earnings specifically, it has been quite a mixed bag. But there are a few reassuring pointers. Like if you look at the pace of downgrades, it has clearly plateaued. So, incremental downgrades, earning downgrades is not coming in at a velocity that it had come in the past couple of quarters. And at the same time, we can see a re-rating on the upside coming through very well and at a very promising pace. So, if we were to look at the trend as is and consider and extrapolate it in context of all other variables that we expect and the markets to move in favor, we can expect. Earnings-led re-rating to be on its way for the broader pack. In fact, we will see more upgrades than downgrades, hopefully, if nothing really blows up intermittently. So that's one thing working well on the earnings front. If you were to further dissect the markets into large cap and mid caps specifically, because you spoke about the mid caps earnings, being reassuring, while Nifty as a larger pack being flattish. One thing,
Hmm.
that is not that may be slightly deceptive in terms of the earnings of these two distinct packs coming through and the pricing effect that we are seeing in the market is that mid cap for the mid cap pack, an earnings revival was already expected on its way. A lot of it was already priced in. In fact, probably sometime around the last quarter post earnings, we only had this conversation where we spoke about how the mid cap pack was indeed turning around the corner, and we expect a few more quarters of healthy earnings to be posted in, and the markets has priced it in. So, and hence we are not seeing any exuberant reaction to good earnings because it was priced in. On the other hand, although the Nifty earnings were flattish, it also in a different way, from a different perspective, it also reflects resilience of these balance sheet heavy companies, right, with strong balance sheets and very strong market shares. And there's a lot of flow that is finding solace in terms of margin of safety from a valuation standpoint as well. So this creates a perfect concoction where mid caps are positioned for growth. It may take slightly longer in the near to midterm, but in a world of global uncertainty, and with just slight sparks of risk on emerging, risk on sentiment emerging across the globe, the valuations and margin of safety supports the thesis to invest in large caps right now. So in the in the near term, it could indeed be a case where large caps would most likely outperform mid caps, despite mid caps showing a more robust earnings growth rate in the near term before the all the
Hmm.
earnings that are priced in that inflection point crosses in the subsequent quarters.
Hmm. Okay, got your point. But tell me one thing: if somebody missed out on this leg of the rally, nothing is really looking cheap. If you look at the index per se, in the last 1 year, in absolute terms, we have been flat. Although we are on the brink of hitting record levels, but there are certain stocks that have rallied in excess of 30% or so in the same period. So stocks aren't looking cheap by any means. So if somebody has missed this leg of the rally, how do they really enter now?
So I would make this commentary along with a couple of adages. One is that valuation lies in the eyes of the beholder. So it may look expensive in hindsight if you compare it on a time series basis, but if you look forward and you look at the earnings growth opportunity that lies ahead of the entire listed universe that's there at an aggregate level, if you look at only good quality stocks, it is very, very promising. Of course, there are several pockets that may also be traps, but that's where one needs to distinguish between quality and what could seem like a growth trap as much. But there are the valuations are not ubiquitously or uniformly expensive. There are a lot many pockets of opportunities. If you look very closely, the valuation is also very supportive and conducive. The trick lies in not comparing it backwards on a time series basis, but looking forward on a prospective growth basis and looking for the potential for an earning led re-rating coming into the future. That should be your cue on
Hmm.
shortlisting and identifying opportunities.
So what have you shortlisted in terms of sectors? Obviously, we're not talking stocks here, but in terms of sectors, a lot of
So
rotation is at play in the market as well. Autos, I think, have seen some bit of profit taking after that GST-led up move. Metals, of course, they were hitting fresh highs. Some bit of profit taking now, but banks have taken off in a big way. So, if one had to look at sector rotation and pecking order, how would they, how would you, enumerate them or enlist them rather?
yeah, so like you briefly spoke about the auto pack, right? It saw a sharp spike intermittently, of course, on the back of the GST relief as well as the festive rally. The numbers, the FADA numbers have also been highly reassuring. But from here on, there is some bit of profit taking, but the next leg of rally won't come in a hurry. Numbers will have to corroborate because most of the festive led buying and price reduction led buying is behind of us. So there needs to be some very, very robust consumption led demand that picks up for the space. In fact, even here it would only help to view commercial vehicle, passenger vehicles and two-wheeler plays very distinctly. That will help identify pockets of opportunities. Also, at the same time, there are several sectors that are in its very early stages of what could be a decadal boom. Perhaps banking, since you mentioned it is one of such sectors, we remain highly optimistic about the prospects of banking. Select high quality lenders will race far ahead of the pack. The macro setup is in favor right now, and the valuations are also making sense. And from here on, we expect their ability to improve their bottom line as more operating efficiency kicks in will only improve from here on. So banks definitely, as a sector, we look at very closely. Within financial services, there are capital market linked plays that we are viewing favorably.
Hmm.
This would encompass all the businesses that engage in capital markets and capital market related services, right? This looks like a very nice industry segment right now as we speak. Apart from that, power is another sector that we look at closely. So certain cyclicals like power and industrials, we believe it would pick up faster than the others. So, and telecommunications and ancillaries in that segment. So these are a bunch of sectors and sub-segments that we are looking at closely and favorably.
Hmm. All right. Okay, those were some of the sectors that you mentioned. But what about the recent listings? Some of them saw a great run after listing, but we are seeing some bit of correction underway for some of them. So, does the correction offer opportunities to get in? Obviously, you'll not talk about a particular stock, but some of these IPOs, do you think they're worth looking at upon correction?
I feel if you look at the past entire year, there are several companies that have hit the bourses. It would be unfair to paint the entire segment of new listings with a single brush. I feel there are opportunities that exist and very good companies that have moved from the private market into the public market segment, offering investors an opportunity to participate in their growth stories, which were otherwise unavailable largely to listed universe investors. So, a bottom-up approach to companies would help distinguish, the good ones from the others. So, one needs to be very stock specific. Any attempt to paint them with a single brush will lead to either wrong conclusions or pay way for mistakes in investing.
Hmm. All right. Well put. But last question, really, Nirav. We had numbers from Nvidia last night, and for now it seems that they've managed to allay concerns over a potential AI bubble. I think we are seeing good traction in stocks like NetWeb today. So, I mean, where were you in this entire, where were you placed in this entire debate of whether the AI bubble is about to burst, and where does it, put stocks like NetWeb or companies like NetWeb on the map? Now that at least, the nerves seem to be frayed for the short term, at least, if not the longer term. So, how are you looking at some of these AI related plays?
So even in the past and even now, I personally maintain a stance that AI in itself is not as much a bubble. It is a transformational development that is here to stay, and it will have offshoots and applications into several other sectors and segments. Right. So AI will not just be adopted by players in non-AI segments, but there are players in non-AI segments that will come up with their own AI foundational models and AI led businesses and services that will give a fillip to AI as a concept overall. So AI as a concept is not as much a bubble. It's here to stay. It's not a trend, right? It's probably an advanced version of what internet did to the world. It's something that AI takes a small step further, takes that narrative a small step further. So that's here to stay. Of course, the nerves are frayed around valuations of AI, of companies engaging in AI related services and development. That's where the nervousness is understandable because it may give a bubble sort of an image, especially when asset prices shoot up in a relatively very short span of time. It may give the impression of that of a bubble. Of course, some may argue that if it walks like a duck, it talks like a duck, it is a duck. But given the way life is at a sectoral level, it is at such nascent stages that even if it were moving in that direction, it is not. It will not reach the bubble stage in the near term. It could probably at some
Hmm.
point in time, but it becomes a bubble when it is susceptible to being burst, and that happens when balance sheets start withering. There are several examples of bubbles in the past, but during none of the bubbles were balance sheets as strong, were capital flows as strong, was the actual adoption as strong as it is for this particular development, right? So the comparison with previous bubbles don't hold as much water, at least not on a like to like basis. So valuations, it needs to stand the test of time, and it needs to percolate, from a balance sheet led conviction to earnings led conviction. And that's something that will take some time, like with any innovative company or industry. So till then, it needs to stay through the course and stand the test of time. But it's not happening anytime soon. We are not close to that spot of vulnerability, at least in the near term.
Okay, so you are in that camp that believes that a bubble-like situation in AI is still some time away. At least now is not the time to call a bubble. But with that, Nirav, completely timed out. Would like to thank you for taking out time and joining in. Always a pleasure, and look forward to our next interaction as well. Appreciate your taking out the time this afternoon.
Thank you. Pleasure speaking.
Thanks a lot. Well, on that note, take a look at the market. We are back around that 26,200 mark, although cooled off from the day's high of 26,246. We did cross the 26,216 mark. That happens to be the last record close for the Nifty. So that's also a crucial level. So if we close above 26,216, that will be a fresh record close for the Nifty today. For now, we are at 26,200. 4 more minutes to go. Let's see whether we can, end above that 26,200 mark or not. But yes, it is a cool triple-digit move on the Nifty for the week. Week to date, we are Friday to Thursday. We are up somewhere around 1% or so on the index. The mid-cap index, underperforming right now. Even the breadth, as even Nirav was pointing out that till the time the mid-caps or the broader end of the markets moves in tandem with benchmarks, he won't really be as excited about this rally as one would want them to be. But nevertheless, we are looking at a close around the 26,200 mark. Bank Nifty hit a fresh record high today. I think it was 59,440 or so. So it will be a fresh record close for the Bank Nifty today as well. But let's take stock of some of the movers then. Eicher Motors all-time high. The stock is up almost 3.5%. Top Nifty gainer. Reliance Industries and HDFC Bank, these are among the top contributors on the Nifty today. Bajaj Twins right up there on the gainers list, both gaining in excess of 2%. Tech Mahindra is also participating, although the broader Nifty IT index is trading in the red today. Geo Financial, that's also gaining somewhere around 1.5%. SBI Life, I think, has also hit a fresh all-time high today. That stock is up 1.5%. So I think it's hit a fresh 52-week high. Yes, so that's also in focus. Aside of that, you have stocks like Hindalco doing well. There was an HSBC note on metals where they are constructive, and they've initiated coverage, with a constructive stance, and they have listed out a few names like Hindalco and Alco, which are on their buy list, and which is why we are seeing some traction in some of these metal names. On the flip side, Asian Paints, it's had an okayish, goodish run this week. Some bit of profit taking, there on Asian Paints. Titan, it hit a fresh record high yesterday. Today as well, it extended its up move, but right now it has come under some bit of profit taking. Tata Steel also slipped into the red. Hindustan Unilever, Kotak Mahindra Bank, Infosys buyback is has kicked off today. So that stock is also trading in the negative territory. M&M is another one. M&M had its investor day today, where they have outlined some very ambitious targets. But the stock has kind of slipped into the red. Some of these pharma names are also not doing all that well. Look at Dr. Reddy's, that's trading with a negative bias. Bharti Airtel, yesterday was among the top gainers. Today, seemingly quiet in trade, and so is ICICI Bank from the banking lot. But let's take a look at some of these Nifty 500 movers as well. Okay, there you go. We are just 1 minute away from the market close. Okay, we have a guest joining in then. On that note, let's understand his view on where we are headed next. Joining us is Vishal Malkan, technical analyst at Malkan's View. Vishal, lovely chatting with you here on our show. We came very, very close to that record level of 26,277. What are the charts suggesting? We are looking at a close around the 26,200 mark. Do you think it is a possibility tomorrow, or are we going to run into some kind of a resistance?
Yeah, thank you for having me on this show. And I think it's a very strong sign by the market that it's showing that resilience at the top. And in spite of the global markets taking a breather, and more than the Nifty, I'm more positive and buoyant about Bank Nifty because it has been making new highs since last couple of days. And Bank Nifty showing new high is a great sign for the market. So definitely, it looks like Nifty will also cross the new high and we'll go into new zone.
Okay, the Nifty is poised to hit a new high. That's the view. But of course, now we've shut shop for the day. Just a shade below that 26,200 mark, 26,193. That's where we've ended the day. We wait for that to settle a bit as well. Sensex up almost 450 points. The mid cap index underperformed. Barely in the positive zone. Nifty Bank index 59,340, a fresh record close for the Nifty Bank index above that 59,300 mark. The all-time high level I think is 59,440 on the Nifty Bank index. So yes, a record close for a second day on the trot for the Nifty Bank index. And if you look at some of the other sectoral movers, it was a divided house. You had autos, banks, FMCG in the green, but some of these other sectors like metals, pharma, real estate, of course, has been on the back foot yesterday as well. It was among the top laggards, and today as well, extending those losses. IT, after a great day yesterday, some bit of a breather there, marginally in the red. Metals started the day on a strong note, on a strong footing, despite the strength in dollar index, but came under some bit of profit taking and ended a little on the back foot. Vishal, how are you approaching the IT basket now after yesterday's renewed up move of 3%? Today some bit of profit taking, but a lot of experts are more gung-ho on names like Persistent from the broad end of the markets, even Coforge for that matter. How would you approach IT? Would you look at the large cap ones, the likes of Infosys, TCS, or would you advise sticking to the mid cap names that have much better prospects, even fundamentally, some experts have pointed out. Which camp are you in, mid cap, or would you look at large cap names?
Yeah, first of all, I'm in the buying side camp of IT stocks for sure. It has been a consolidation phase for a long time, and now finally they are showing some momentum in the last few trading sessions. And definitely, as you mentioned, I will go with the mid cap names. I would go into that camp like Coforge, Persistent, and even to an extent Tata Elxsi or Cyient. All of them are showing good base level consolidation and now breaking out of those levels, which shows that they are having good potential from here in the next 1 quarter.
Okay, buying camp and the mid cap end of the spectrum. Let's talk about the auto pack as well. Autos saw very good traction after the GST rate rejig announcement. But of late they have come under some bit of profit taking. But if you talk about the two-wheelers, the likes of Hero MotoCorp, that has seen good traction, right? It has earned 3 upgrades this week. JP Morgan, Morgan Stanley, and today from Macquarie as well. Target price in excess of 6,700, 6,850 in some cases. And of course, they have also pointed out certain factors that are working well. Domestic market share stabilizing. In fact, upside risk in motorcycle and scooter, both the segments led by GST cuts and new launches. And of course, they are also pointing out that Street is willing to assign a higher multiple to a stock like Hero MotoCorp. What are your immediate targets on the stock, and is it a good time to buy into this stock, or would you say that the risk reward is looking a little skewed at these levels?
I think you are right. Hero Moto definitely looks a strong stock at the moment and into new highs, and definitely those targets of 6,500, 700 can be achieved. But to buy at this level, there could be a risk reward ratio issue because it has been moving perpendicular in the last few trading sessions. So I would definitely wait for a dip to buy rather than buy at the current market price.
Okay, wait for a dip when it comes to a Hero MotoCorp. One stock that has been a newsmaker, for the last couple of months, but yesterday there was, an order from Supreme Court, not very conducive for the firm. We saw the stock tanking somewhere around 12-13% today as well. It has extended its losses, although I think it has ended off the day's low. Saman Capital. The management has said that there are no open investigations pertaining to allegations and of course no investigations pending before any agency as well. You know, and of course the stock was also in F&O ban today. It has had a good run in the last 2 months or so, but you know, my question is, has there been a trend reversal or is this just a temporary blip? What are the charts saying? Do you think that the trend has reversed and now the stock could see more downside from here?
Yes, one thing for sure, we can say there is a trend reversal because whenever there is a major price action, which it has shown in the last couple of trading sessions, along with a high volume, which has broken certain levels which were supports, and that's why we can say that there is a reversal and it will take some time before it even tries to make a new high. So if you are into this stock, then we should look at exiting or waiting for further dips if you want to buy this, because definitely based on pattern created on daily chart as well as weekly chart has been extremely bearish, and there can be further downside to this.
All right, you can expect further downside to a Saman Capital. You know, some of these stocks that were volume buzzers today were the likes of Radico Khaitan. It has gained in 4 out of last 5 sessions. Today, it saw a good, you know, 5.5% kind of an up move. You know, at these levels, how are some of these liquor names looking to you? They seem to be in high spirits, the likes of Radico, Tilak Nagar. Tilak Nagar also, I think, launched its premium whiskey. It entered the premium whiskey segment and launched the 7 Islands Pure Malt Whiskey. You know, these stocks have been fairly upbeat. What's the strategy here?
I think out of the stocks you mentioned, Radico looks very positive on the daily, weekly charts and making consistently higher tops and higher bottom. And the volumes have also been on the rise. So that means there is more buying and happening at this levels as well, which means there is further upside to this stock. And we can have a safe kind of a stop loss at 3200 and keep holding with that stop loss for targets of 3800 and 4000 in the coming future.
Okay, that's about you know, the liquor space. Radico looking good on the charts. I don't think we spoke you know, in details about the banking pack, Vishal. You know, PSU banks have seen good traction now. Private banks have also seen good moves, especially the likes of Axis Bank that have hit fresh highs as well. SBI, of course, hitting fresh highs on a consistent basis. How should one you know, look at some of these large cap you know, names, the leaders in the banking pack? Do you see more room on the charts?
I would say that as long as the trend is in motion, we don't like to catch the top and there is further upside to banking sector, and definitely I would go with the most outperforming sector, which is PSU banks. And if you look at the likes of PNB, Canara Bank and Bank of Baroda and a couple of others, they still have some room on the upside and we can continue holding them with a trailing stop loss compared to the private banks which get stuck at certain levels which we can see right now at the charts.
Okay. PSU banks, of course, that's where the preference lies. Even insurance names, you know, have been doing well. The likes of SBI Life, I think at fresh 52-week highs as well. Of course, there were some you know, issues with regards to the GST changes, no input tax credit, and we did see some correction on these names, the likes of HDFC Life, SBI Life. But in this renewed up move, would you look at some of these names within the insurance basket? And if there's something else that you like within insurance, tell us more about that as well.
I would say, yeah, HDFC Life has been doing pretty well, and I would like to go with that, the leader of that sector. And definitely we can see there's some upside left, and we got a good correction in the last 4-5 days, and it has got bounced back today. So we can look at new highs, or the recent highs can be crossed around 790, 800 levels on HDFC Life. So that looks the best out of the pack.
HDFC Life looking the best within the insurance pack. You know, one stock that has done extremely well in recent times, but you know, it succumbed to selling pressure yesterday on the back of a note from Citi. I'm talking about Biocon. Citi has double downgraded the stock to sell from buy, and they have cut their target price as well. And they are predicting a 12% downside from yesterday's close price. In the last 2 sessions, the stock has shared in excess of 6%. Of course, it's rich valuations that the brokerage has cited. But here as well, do you see a trend reversal of sorts, or do you think this is just an opportunity where investors or traders who may have missed out could get in? How are things looking on Biocon, and what are you making of the move that it has seen in the last couple of sessions?
So Biocon, which was looking very strong on the charts, on the daily and weekly charts since a long time, and it still looks good as long as it holds on to the level of 375, 380. In the last couple of days, the way candle patterns and the volumes have been there, looks like there could be a kind of an intermediate halt to the uptrend and might consolidate for a few more days or maybe few weeks before it starts its uptrend. And if it goes below 370, then we can say that okay, that the trend is over and it can go into a longer consolidation than what we are expecting. So I would look at 375, 380 levels closely in the next few trading session, whether it breaks or not.
Okay, got your point. That level is crucial to see whether or not the trend has reversed or not, so to say. But one stock that has regained traction after a long time, and I think that's Asian Paints. Good numbers and easing competition concerns as well. But last 5 sessions, it's seen some bit of profit taking. It has come very close to its 52-week highs as well in recent times. Any dip? Would you consider any dip as a buying opportunity in a stock like Asian Paints, or would you look at mid-rung stocks like Berger Paints and Indigo Paints for that matter? How are the dynamics changing for paint stocks on the charts?
I definitely think that Asian Paint has just begun its uptrend again after a kind of almost like a consolidation for 1 year. In the last couple of months, whatever has happened, I think it's just the start of a new uptrend, and every dip can be an opportunity to get into this stock. So definitely looks stronger, and anywhere close to 2700, 2750 would be a good entry level for us.
Okay, that's about Asian Paints. But let's talk about some of these EMS names as well. How are you looking at shares like Dixon, Keynes? Any of these stocks worth a look now? I think Keynes saw some kind of pressure recently. Dixon has also come off quite a lot from its highs. How are you looking at some of these EMS names? PG Electroplast as well. Any of these catching your fancy?
I think they're just they had a very good run in the past and they're just consolidating. And if I had to pick one of them, then it would be Dixon, which is now showing signs of revival in the last few trading sessions. And if it can sustain the levels of 14,700, 14,800 in the next few trading sessions, then we can look for an opportunity and we can look at the targets again about around 17,000 in the next like 3 to 4 months.
Okay, that's about Dixon. But let's also talk about NetWeb. This stock saw a renewed rally today, 4% kind of an up move on the back of strong numbers from Nvidia. But the stock has seen a fair bit of correction in recent times. The last 1 month, it has tumbled 12% or so. Does this today's move, does it mean that it has revived the up move that it had seen in the past? In the last 6 months, the stock has almost doubled.
Yes, and I think this is just a kind of a correction which we saw in the last 1 month or so, and it has actually made a double bottom around 3400, which looks like it's a strong bottom and a strong support. With that stop, we can look at the stock as an entry level right now, and looks like that it will reach the highs which it made in the last quarter, which is around 4500 in the next 3 to 4 months. So definitely looks interesting at this levels with a very small stop loss of 100 rupees for a target of around almost 800 to 900 in the next few months.
Okay, got your point. What about some of these names like Aptus Value Housing? It was under some bit of pressure today, but any of these housing finance stocks, would you look at them from the financial space? Or would you rather look at gold loan companies like Muthoot that have done, of course, fairly well?
I would like to avoid this sector for some time because we have seen some correction there, and let that correction get over and consolidate before I make an opinion about it. So I would not like to try to catch the bottom as of now and focus on the ones which are working right now, as we mentioned earlier about auto sector and PSU banks. right? And as far as Muthoot Finance is concerned, I think it has a very strong run up. And even if we enter right now, the risk reward might not be a good equation. So we'll have to wait for a dip for that.
Okay, that's about it. Avoid, this housing finance and NBFC for that matter, and look at sectors that are poised to do well. But before I let you go, Vishal, any recommendations for our viewers for the next perhaps 1 month, 2 month kind of horizon, or even a shorter one or a longer one? Any recommendations for our viewers going forward?
I would not go very stock specific right now, but I'm definitely, as we discussed at the beginning of the show, that IT sector looks like a revival mode after the strong consolidation, and especially the mid cap names which we discussed would be the best bet for the next couple of months.
Okay, got your point. Also, one more thing in terms of strategy, is it time to take some profits off the table? Or buy on dips, that's a strategy that one should follow in this market.
Buy on dips is one, and secondly, when you are in a kind of a stock which is running, let's say for example Muthoot Finance, or for example auto stocks or PSU banks, we know nobody knows what the top is. So rather than booking profits prematurely, what we follow as technicals is to follow a trailing stop loss. Like, let's see if there is a correction from the top by 3%, or if it breaks a certain moving average or a certain level. That's where I would like to book profits rather than just book profit just because I'm making money. So that would be a wise strategy.
All right, got your point. With that, Vishal, I would like to thank you for taking out time and joining in. It was
Thank
a
you so
pleasure
much.
chatting with you, and I look forward to having you on the show more often.
Thank you. Looking forward.
Thank you. Thanks a lot. Well, let's shift focus then and talk about some of the stocks that were on my radar today. And I want to talk about Biocon in particular and in greater details, because the stock, as Vishal was also mentioning just a few minutes ago, has done extremely well in the recent past. But yesterday, after this Citi report, the stock took a U-turn. Yesterday also it ended lower by about 3.5%. Today as well it was down almost 3.5%. So it has lost somewhere around 6 to 7% in a matter of 2 sessions. Let's talk more about in details about the report that Citi came out with. It has double downgraded the stock to sell from buy, and the target price has been cut to 360 rupees vis-a-vis 430 rupees earlier, and which implies a 12% downside if you compare to yesterday's close price. Now, rich valuations, that's one reason that was cited by the brokerage. Now, brokerage says that the 1-year forward PE is 2 standard deviations above the 5-year mean, which means it is more expensive if you compare it to long-term averages. The lower target multiple for biosimilars business, has been cut to 14 times vis-a-vis 20 times earlier, and that has been done to reflect the worsening market dynamics and changes in the US FDA guidelines. Now, lower target multiple for the generics business as well. In fact, the brokerage has lowered the target multiple for the generics business to 14 times vis-a-vis 16 times earlier, and that of course will be reflecting via lower margins as well. The brokerage also pointed out that its 1-year forward enterprise value to EBITDA, EV to EBITDA, is 0.7 standard deviation above mean, despite stake sales in Biocon Biologics and Syngene as well. However, the research services business, for that it has been kept unchanged at 25 times EBITDA. Now, although Biocon is one of the best globally in terms of biosimilar R&D and execution, now Citi says that prices continue to soften in the in-market products, while pipeline molecules too appear hyper-competitive, and that may result in the company's biosimilar sales falling short of street expectations. Now, the recent US FDA guidelines of removing PH3 may invite additional competition, and that can start weighing on the valuations of Biocon. That's what the brokerage has pointed out, stating that their financial FY28 estimated EBITDA multiple is 7 to 10% below the consensus estimate. So, FY28 estimate from Citi is 7 to 10% below the consensus estimates. Of course, it's quite a downgrade, and which is why they have double downgraded it to sell from buy. Of course, we've seen the reaction play out in the stock prices as well, and adverse pricing, the brokerage has mentioned, may also result in a negative surprise when it comes to street expectations. And biosimilar prices in the US are anyway worsening, and they are also getting reflected in Biocon Biologics' flattish core pre-R&D EBITDA margins despite the big launch that they made recently. Of course, that is coming as a big setback, and the stock has lost somewhere around 6% or so, or above 6 or more than 6% in the last 2 sessions. The next stock is Cummins India. That stock jumped in trade. In fact, Citi sees favorable demand outlook for this company. In fact, they met the management of this company recently, and some of the takeaways that they have shared is the fact that the management has highlighted that demand for power generation equipment remains solid, and that will be driven by continued activity in real estate, construction and infrastructure projects. Now, these sectors are providing a stable base of orders, supporting near-term revenue visibility as well for the company. Now, data center opportunity, according to Citi, remains intact as the company expects consistent demand from co-location data center providers. But hyperscaler demand is expected to remain lumpy, but still they will be meaningful going forward. And with India's data center capacity expanding rapidly, management sees this as a sustained multi-year growth driver for the company. Now, while the industrial segment saw some bit of weakness in the second quarter, now management believes that this is likely to be transitory in nature, and it's not something that is structural. Now, they see clear recovery potential across railways, defense and marine, where order pipelines remain healthy. Now, the company also continues to deepen and widen its distribution network across regions, and this expansion is expected to improve the reach, customer servicing and capture incremental market share in the underserved pockets as well. And lastly, post the implementation of CPCB 4+ emission norms, the company expects to secure a higher share of customer wallet as premiumization, technology upgrades and compliance-led replacement demand kicks in. Now, that is likely to strengthen margins and stickier customer relationships over the medium term, which is why I think we saw good traction in shares of Cummins India today. Well, but with that, we've come to the end of this edition of Closing Bell. Of course, it was a thriller of a Thursday, although we ended just a shade below that 26,200 mark, but we came 40 points within the all-time high of 26,277. Let's see whether we pick up from where we left tomorrow morning, and let's see whether we can make a dash at that 26,277 mark. In fact, even clock in a fresh peak of 26,300 or not, that's something we'll discover tomorrow itself. But the only sore point once again was the market breadth that was in favor of losers, and the broader end of the markets were underperforming as well. So net portfolios weren't looking all that great today, as has been the case in last few sessions. But on the headline index level, things are looking pretty rosy. Let's see whether we can conquer a fresh peak tomorrow itself or not, and whether tomorrow will be a fantastic Friday as well. But for the week, the Nifty is up in excess of 1%, nothing to complain about. Hopefully we'll come back fresh tomorrow and look at a fresh peak as well. But with that, thanks a lot for tuning into Closing Bell. Thanks a lot for watching and staying with us for the entire hour. We'll see you again tomorrow morning at 9 a.m. Don't forget to tune in and keep your queries handy. We will get them addressed as well. Have a great evening, and I'll see you soon. Thanks a lot for watching.